Hey, hi friends. This is Sourabh Gandhi from PivotTrading.net, founder of Pivot Trading and online marketing partner for Zerodha and online marketing partner for RKSV and Upstock. In this particular video, I am going to explain you about one of the options trading strategies based on the Strangle strategy. So here are few my contact details, few details about myself. You can have a look, and in case if you wish to contact me, here are my mobile number and my here is my WhatsApp number and my email address. I won't be able to attend the phone call, so please communicate with me only by email or by WhatsApp. Now coming to the topic, what we are going to do is we are going to discuss here on a strategy called as Strangle in options. Let's understand what is the agenda for this particular session. In this particular session, we will look into what is Strangle, how to trade in Zerodha and Upstock with the Strangle strategy, how you can ease your strategy, how you can ease the implementation of this particular strategy with one single click in Zerodha and Upstock. We will look at both of these trading platforms. And most important, before I begin this particular session or this particular video is divided into two sections, where in the first section I would be just be explaining the theoretical part of it and what are the risk reward and the break even associated with this particular strategy, and the second part will be on how to use this particular strategy and when to apply this particular strategy. So the second part will only be available to the paid users or to all those users who have opened their account in Upstock or those who have opened their account in Zerodha under me. Now the important clause is all those existing account holders of Zerodha who have opened their account under my reference code will be able to access only if they have done any trading in their Zerodha account since the day they have opened their trading account. So when you are asking for access for this particular video, you will have to drop me your email address, you will have to drop me your Gmail address to my email address, and then I will verify the details and then I will grant the access. So it is very important for existing Zerodha customers who have already opened an account under my referral code that there should have been some decent amount of trading that has actually been done. See, the idea is if you're not trading, basically it means there is no point sharing the strategies with you, because you are not at all trading in Zerodha, you're not at all using the account for the trading purpose. So it is as simple as that. This particular video, the paid section, the second section, is only available to those users who have opened their new account in Upstock under me, or those who are going to open new account under me and Upstock or in Zerodha, and all those existing users of Zerodha who have already opened account in Zerodha under my referral code, and those who are actually doing trading in Zerodha. Okay, and if you're not open account in Zerodha or in Upstock, or for some reason you cannot open an account in Zerodha or Upstock under my referral code, then you can go for a paid subscription from some nominal fees, and then you can watch this video. Now we will be in the second section, we will be covering when to use this particular strategy, that is straddle, and that is long and short strangle, when to use long strangle and when to use short strangle. Also, we will look into how we can get, using this particular strategy, how we can get 1 to 2% return on intraday basis daily consistently using options. Okay, the accuracy or the consistency is approximately 80%. It does not mean, see, no strategy is 100%. I mean, there could be, but I don't have 100% strategy. So this particular strategy has an 80% consistency. So there are definitely chances of 20% failure as well, which over a due course of time in the video I will explain you under what circumstances this strategy might fail. Okay. So let's begin. So what is Strangle? Strangle means a combination of out of the money call and put which is equally distant from the current market price. So you need to first understand what is out of the money call. For this you can watch my video on basics of options, or you can read on the internet what actually means OTM call or OTM put, out of the money. For example, if the market or if the Nifty is currently fluctuating around 9500, it means the strangle will be a combination of out of the money call, that is 9600 call, and out of the money put, that is 9400 put, and this both call and put will be almost equally distant from the current index price or the current instrument price. So that is basically called as strangle. Okay, now within strangle there are two ways. You can either buy the strangle or you can sell the strangle. So you will either do the long of strangle or you will do the short of strangle. So let me first explain you this particular strategy, what is called as long of strangle, and what are the risk and reward involved here. Okay, so see, in long strangle means, long means you are buying. Okay, so it means that you are buying in the out of the money call and you are buying out of the money put. You are doing both this thing at the same time. Okay, this is basically called as hedging. Now let's see what is the risk and reward here. So what we are doing as a part of a trade, see, as you can see here, this is the center point where my mouse is rotating right now. It is called as at the money. Okay, or you can consider this as the index or the instrument price which is currently at present going on in the market. Okay, A is a point which is less than the current market price and B is a point which is greater than current market price. So now how do we take a trade? How do we buy a strangle? How do we buy a strangle is we buy a put at a lower price and we buy a call at a higher price. Okay, we pay some premium for this and that is the cost of our investment. Now market expectation, you can read on this. Profit and loss characteristics at this particular expiry is what? The profit potential is unlimited, although a substantial directional movement is necessary to yield a profit for both a rise or fall in the underlying. Loss occurs if the market is static, limited to the premium paid in establishing the position. Break even is occurs if the market rises higher strike price above the higher strike price at B by the equal to the cost of establishing the position, or it falls below the point A by the equal amount of establishing the cost. So now in other terms, let me put it in very simple language. Let's say my Nifty is currently rotating at around 9500, you buy 9600 call and you buy 9400 put. Okay, so let's say you buy both of them at a 50 rupees premium. So your total cost of investment is 100 rupees, that is 7500. Okay, 75 का lot होता है, 75 is a lot size for Nifty. So 100 rupees is your total cost of investment. So 100 into 75 is 7500, that is 7500 is the total cost of long strangle. Now when do you make a profit? The profit in this particular strategy is unlimited, but there is a condition to it. You will make unlimited profit only when Nifty moves in one of the direction heavily. Okay, and you will make either profit when the market moves either upside or either on the downside, on a huge basis, I mean on a substantial basis. Okay, so that is very important. And your loss is limited to the premium that you have paid. So you have paid 100 rupees as a premium, initial premium, so that would be your maximum loss. Okay, now so this is basically about long strangle. And where does your break even points come? So break even point will come when the Nifty moves more than 100 rupees above B point, that is 9600. Since see, because you have bought a call of 9600 at a premium of 50, plus you have bought 9400 at a premium of 50, another 50, so total investment is 100. Now your profit will only begin when Nifty goes above 9600 plus 100 rupees, that is 100 rupees is your cost of investment. Similarly, your profit will increase, you will start making profit only if Nifty falls more than 100 points below 9400, because you have bought a put of 9400. Okay, so that is how you identify the break even point. So see here, this is the point where you have bought the put, this is the point where you have bought the call. So definitely till here, this point, you will not make any profit. Till this point you will not make any profit. You will make unlimited profit if the market goes this side. If you will make unlimited profit if the price of the index goes below this point. Okay, now it all depends on at what time you are buying, what is the expiry. So that is why I will explain what is the correct time to buy and sell at the end of this particular video. So that was long strangle, that is you are buying the options, you are buying the call and put. Now this is just the reverse of it, that is short strangle. Short means you're selling, you're short selling. So then what I'm trying to say is short strangle means selling of out of the money call and out of the money put. Now here, see, this is the price of the underlying. B is a higher price, A is a smaller price. So you are selling the call at a higher price, you are selling the put at a lower price. and you eat the premium. Your plan is to eat the premium. Okay, let's say you sell the call at 50 rupees, you sell the put at 50 rupees, you get 100 rupees premium, but you will have to put some margin with the exchange to make sure you make profit at the end of the month or at the end of the day. Okay, the risk here is more because the profit is limited and the loss is unlimited. How the profit is limited? The profit is limited to the premium that you have eaten up. That is, the 100 rupees that the premium you have got is the maximum profit that you can make. Whereas risk, your chances of loss is unlimited, because if the market moves in any of the direction, the loss can be uh, the amount of the movement that the index is making in any of the direction, or the script is making in any of the direction. So you need to analyze when to buy and when to sell the strangle. So that is what I'm going to explain you at the end of the video. Here I'm just explaining the theory, what this long strangle means and what the short strangle means. Okay, so in this particular strategy, that is short strangle, profit is limited and loss is unlimited. So you need to design your strategy accordingly. You need to take this short position in strangle at an appropriate time. Okay, let's see how we can apply this particular option strategy of strangle in Zerodha. So what you have to do is you have to come to my website pivottrading.co.in strategies/index.php. You have to go to the options trading strategy, select the neutral or popular strategies section, and there you will find long or short strangle. Select the strike prices of the call and put, place orders. So let's see how we can do it practically. I will go to my browser. Where I will open my website. So this is my website, options trading strategies, pivottrading.net. Here you have to come to pivottrading.co.in. Okay, so here you come to my website's homepage. Then you have to come to this particular section, options trading strategy. Come to options trading strategy, and here you can select the different strategies. So here there are different categories of strategies. What we are discussing right now is the one of the popular strategy called as strangle. So here there are different options. You can do long strangle and short strangle. See, there is something called as straddle also. I will create a new video on straddle as well. But this particular strategy we are concentrating on strangle. Okay, so here there are two strategies called as long strangle and short strangle. For example, let's say we want to do a long strangle. So here I do a long strangle, and here you have to select whether you want to do an MIS or normal. Okay, so let's say we keep it as of now an MIS. That is, you want to do it apply this strategy on a intraday basis, and click on this particular button called as start designing strategy, and you will get the options. Here you will get what call you must buy and what put you must buy. So currently Nifty is revolving around 9,515. So that is why it has shown 9,600 and 9,500. Now let's say you can change it. You can put it, you can decrease it to 9,450, and this will become to 9,550. Or you can increase this to 9,600. Okay, so here based on this, it will try to identify what is the call and put that you can buy and sell. Okay, so let's say here we have identified that we want to buy 9,600 call and we want to buy 9,500 put. Okay, and then you can select here the number of lots. So let's say I want to buy 2 lots. So here I have selected 2 lots. Okay, so it automatically populates the other quantity, because the rule of the strategy is you need to trade in equal quantity. You need to trade in equal quantity plus equidistance from the strike price. Okay, so let's say if I change it to 4, here it becomes 4. Okay, and then what I have to do is I have to click on the place limit orders, and since I'm already logged in, so here I can it's automatically takes me to this particular video, this particular section where I have to, my order is already pre-populated. So I am trying to buy 9,600 call and I am trying to buy 9,500 put at the same time. Okay, and I do a place order. See here 300 is the quantity selected, because here we have selected 4 lots. So 4 lots is nothing but 300 quantities. Okay, so here I do a place order. With one single click, your orders will be placed to the exchange. Okay, now since the market is closed, today is Saturday when I am creating this video, the market is closed, so the order got rejected, but otherwise you need to make sure you have sufficient margin and the orders will be placed to your account. So let's go and check our order book. So this is my order book. See, as you can see right now, the current time, which is 714 is the current time. So at this particular time we got 2 orders directly in one single click. Okay, now the market is closed, that is why the order got rejected. Let's come back to this. So this is how you can place this particular strategy in Zerodha. Now let's see how you can place this particular strategy in Upstox. Okay, so what you have to do is first get an account opened in Upstox using my referral code 108626. Log into your Upstox account in 2 or 3 days. You will get your login ID and password. Once your account is open, log into your Upstox account, go to option strategy, select Strangle and place orders. Now let me show you practically how you can do it. So I will go to my browser and I will go to my trading platform. So I've already logged into my trading platform. So this is my trading platform. Okay, and here I will go to this plus sign which you can see here. I will click on the plus sign and at the end I can see option strategies. So here everything is automatically inbuilt. With Upstox, all these strategies are automatically built in. You can plan your strategies very easily. Okay, just click on Strangle and here you can select whether you want to go long or you want to go short. Okay, so once you select long, so here you have to select your strike price. So let's say I am trying to buy 9600 call. Okay, so see, when I select a 9600, automatically the puts gets changed, because as per the strategy it has to be equidistant from the strike price. See, if I increase this, it will decrease here. If I decrease here, it will increase here. Okay, so it will always remain equidistant. So it automatically, the logic is automatically taken care here. Now what you have to do is you have to just click on place strategy button. It will show you now you are trying to buy this particular option at so and so price and so and so. So it will automatically actually place a market order. So you need to make sure that you have sufficient margin to place these orders. Okay, so here you click on the confirm strategy and the orders are placed. Now the market is closed, that is why you got a rejected message. Okay, see here you can see there are 9600 and 9450. The both orders have got rejected. Okay, let me show you the order. Okay, so these are the other orders which I placed in the morning for my testing purpose, but this is something which you can see which I recently placed. Okay, so yeah, Upstox also has a very good trading platform, very fast, very stable platform that you can use for your trading experience. Okay, so this is how you can apply your options trading strategies in Upstox for the Strangle. Now coming to another important point, how to calculate your risk and reward. See, it's very important that when you are entering into any of the trade, you must know what kind of risk you are taking and what is the reward that you can get. Okay, so Upstox has developed a very good tool, ready-made tool, which you can use to design your option strategy, and that is why I am promoting Upstox, because it has lot of innovative tools and calculators and very good trading platform which can help you and ease your trading experience. Okay, so you have to go to this particular link. Now let me show you how you can go to this particular link. What you have to do is go to upstox.com. Okay, go to upstox.com and go to support, and here you will find tools and calculators. Go to tools and calculators, and here you can find at the end option strategy builder. So you can come here, you can design your strategy here. So let's say I want to trade in NSE, I want to trade in NSE, I want to trade in Nifty. Okay, I trade in Nifty, I click on next, and then I have to select here, I have options. I selected options and I'm trying to buy 9600 call. Okay, so this is the 9600 call. Okay, so let me first delete this. Okay, so what I'm trying to do is I'm trying to buy 9600 call. At the same time I'm trying to buy 9400 put. Okay, so as you can see, my call and put both are entered here. So this is my strategy now. So now I need to analyze what is my risk and reward. So this particular chart will explain you what is your risk and reward at different points. See, here you can see at the bottom, if the Nifty goes to 9000, what will be your profit and loss? If the Nifty goes to 10,000, what will be your profit and loss? And then if the Nifty is at 9500, what is your profit and loss? Okay, so as you can see, we are in the long strangle, so profit is unlimited. But the thing is, the market has to move in either of the directions. So as you can see, if the more the market moves in one of the directions, our profit gets increased. See, as and when the index gets increases, so if the Nifty reaches 10,000, our profit at this point will be 21,000 rupees. If the Nifty falls till 9,000, our profit will be 25,000. So you can analyze your profit at different intervals, different points. It's very beautiful utility developed by Upstox, guys. So you can use this to design your option strategy, and you can open an account in Upstox using my referral code. So you can keep getting all those benefits from my website as well, and you can use these tools as well. Okay, so now when you will be making loss, the loss is this particular point to this particular point. See the orange line at this particular line, so till 9332, that is 9332. If the nifty falls till this level, your loss is 5000 rupees. If the nifty rises till 9677, your loss is 5141. Your profit will only start if the market, if the nifty moves ahead of this, or if the nifty goes below this. Okay, so this is how you can use your identify your risk and reward. Coming to the next point. Yeah, so coming to the next point, when to use long strangle and when to use short strangle, and how to get 1 to 2% return, or 3 to 4% or 4 to 5% return on delivery and on intraday basis. Okay, on intraday basis 1 to 2%, not more than that. Okay, so from here on the video becomes limited only, the video becomes accessible only to the limited audience who have either purchased my 11 rules of options video. They will get this video for free, I mean the section ahead of this, or the people who have opened an account in Upstox using my referral code, they will get the remaining video for free. Or those who are paying some nominal amount, maybe 300, 400, 500, some nominal amount will be there for this particular video, which you can pay and get this get the timing of how you can utilize it. Okay, so let's move on. Thank you so much for watching my video till the end, and these are a few points which I like to I just always try to share these things with all of you. So try to use the products made in India, welcome GST, respect Modi ji for hats off to Modi ji for all the good work that he's doing. He's creating history day by day. Demonetization was the first history, second history is the GST, and there are more histories to be coming in. I'm sure someday we will see that no reservations based on religion. So yeah, that is something, another history that is, I suppose soon Modi ji will going to create that history as well. And plant trees, at least try to plant one tree in your life, or if you cannot do so, bring small plants in your home, nourish them so that at least they emit the oxygen out. So think about the environment also from your professional time. Spend some time for the society, spend some time for the nature, spend some time for the your motherland. Thank you so much. And just to remind you, this is my Zerodha introducer code ZMPSSL. If you're opening an account in Zerodha, make sure you open an account with ZMPSSL code. And if you're opening an account in Upstox, make sure you open an account with introducer code 108626. Bye bye. Thank you.